Welcome to Women in Wealth. Thank you for joining us here on LinkedIn. I'm Patty Martell, supervisor and producer at CNBC and the co-host of Women in Wealth. This is an ongoing series where we dissect the biggest issues facing women in the corporate world and explore ways in which women can be smarter investors. We want to arm women with the knowledge and insight from female money managers, experts, and entrepreneurs to decode Wall Street jargon and open up the perceived boys club around money and investing.
Wonderful. Hi, Patty. This is Seema Mody, correspondent at CNBC. We're so excited to have you all here and to welcome our guest, Aarti Kapoor, the CEO of VMG Acquisition Corporation. Aarti is a seasoned investor. Prior to joining VMG, she was at Goldman Sachs, has a really good pulse about what's happening on the ground across Wall Street. So Aarti, welcome.
Thank you so much. Thanks for having me.
Let's dig straight into this because there's been a lot more market volatility. Stocks are down again today. You are focused, you left Goldman to basically launch a SPAC for VMG. What can you tell us about the SPAC market right now, which clearly is dealing with a bit of distress?
It's a great question. It has been quite the roller coaster for SPACs, both in performance and reputation. 2 years ago, SPACs were dominating headlines as the best thing since sliced bread, and now you read sensational headlines talking about the death of SPACs. And so always welcome an opportunity to clear up what has been some misattribution around the downfall of SPACs. I'll maybe go back quickly to 2020 when SPACs first came in vogue after a multi-decade hiatus. We had a couple of really high-profile SPAC deals that performed really well. You may remember DraftKings, Virgin Galactic, et cetera. And this really brought a spotlight on this, quote-unquote, new vehicle that was being popularized. It became relevant for companies. They were excited to raise capital and go public. And then for investors who were looking at lucrative investment opportunities. And I was at Goldman at the time. And I can tell you that we saw a lot of high-quality management teams in our traditional IPO pipeline. And they were suddenly keen to learn a lot more about SPACs and taking this alternative path to the public markets very seriously. And so then what happened? A huge rush of new SPAC sponsors entered the market to take advantage of a rising tide lifting all boats. But barriers to entry were low and capital became really abundant. And unfortunately, a lot of SPAC sponsors entered the market that had very little investment history, very little industry expertise. And so it was a dream for companies that had public aspirations. There's a plethora of capital that needed to be deployed. But unfortunately, what happened then is some companies said, well, hey, I've got all this money chasing me. Let me just go public now. And they hit the public market a little bit prematurely. And not because it was the best choice for them, but rather because they could. So then you saw markets start to crash with macro, geopolitical, number of pressures. And all public companies across the board lost a lot of value, but especially these unqualified public market entrants. They weren't ready to predict their performance. They were missing earnings right out of the gate. And so when I refer to this misattribution phenomenon, there's not a causal relationship. There's solely a correlation with underperformance due to that oversaturation. SPACs on their own cannot and do not cause bad performance for companies, but rather they gave many unqualified companies an early path to the public markets, and then those companies perform poorly. Now, when you read about liquidations and the scary headlines, it's really a function of the broader market environment, whether it's de-SPACs or IPOs. ECM activity has just fallen off a cliff this year, and it doesn't have much to do with the SPAC product itself. SPACs, by definition, just have a finite amount of time to transact. And so the market's not conducive, those windows won't line up, and liquidation will be a natural outcome. But, taking a step back, and you mentioned, I moved my career to the SPAC world from banking.
Right. So what are you guys doing now? Are you looking to still acquire a company?
Absolutely. And, we really believe that for high quality companies and high quality SPAC sponsors who have real investment track records and value to bring to the table, there's still a big opportunity that exists. We've got 15 plus years of consumer retail investing experience and relationships. So, our thought process is that companies could go public alone, or they could go public with an experienced partner like us, and we can create value for all stakeholders at the table.
Aarti, just big picture, what do you make of the volatility? We just had our Delivering Alpha conference where a number of seasoned investors like Jim Chanos, Ken Griffin from Citadel, really shared some concerning signs or prognosis about where the economy is headed. What are you seeing?
Yeah, it's been interesting in our world. I think, obviously there have been so many different complexities again between macro pressure, geopolitical, other, COVID supply chain disruptions, et cetera. In most of our conversations, you can't get around hearing inflation, inflation, inflation. And I think what's interesting there is, obviously it has a direct impact on consumer spending. It's increased the cost of doing business for corporations. So you are seeing top lines get hit and profitability get squeezed. But consumers did have very strong balance sheets coming into this year. So really the answer is that we're seeing a very nuanced impact of inflation. You'll see different impact on different consumer demographics, where lower income households have actually been the most impacted. And the lowest income quintile has actually reduced discretionary spending by 25% this year. Then you move up to the top income quintile and they've actually slightly increased their discretionary spend. And similarly, you see very different outcomes based on consumer verticals. So services have been very, very resilient. Think, fitness, wellness, beauty outside of the home, travel, restaurants. We are seeing a nice surge there just due to that pent up demand. But then you may see trading down in commoditized CPG categories where, staples and household items, you can easily find a private label comparable that's cheaper, or COVID cliffs in categories like home appliances, at-home fitness, some of the obvious categories that are more intuitive. So I think the takeaway is it's been a very nuanced, kind of cycle in terms of impact on consumer retail verticals and demographics.
And Aarti, what are you hearing from entrepreneurs? Because you talk to, entrepreneurs, I'm sure probably on a daily basis, right? And I think normally on CNBC, we talk about, huge multinational, billion, trillion dollar companies, but you are talking to, much smaller, startups or new companies. How are they navigating this challenging environment?
Yeah, well, so I think it's been challenging for everyone just due to kind of the confluence of factors that take away from ability to predict a business and plan properly, whether it's, planning for consumer traffic or planning for inventory from, a goods standpoint. Of course, there have been massive supply chain disruptions. So that's impacted, both, the top line as well as the broader P&L. And, it's hard to raise money in the current environment, or if you're going to do it, it may be at a valuation that you don't like. So it is a very complex, environment that we're operating in. That said, there are still pockets of growth. We are still seeing deal flow. And I think in many cases, the idea of having a partner like us is more appealing now than it may have been before when, you had that rising tide lifting all boats. Today, folks really need thoughtful partners who can help them navigate these really choppy waters. So it's certainly, a tough environment for many consumer verticals, but we're still seeing a fair amount of deal flow and folks who want to come to true experts like us in the field.
I'm wondering, Aarti, what do you think your advantage is? What is your unique selling point when looking at wellness or evaluating the opportunities across this space, where I think everyone kind of has an opinion on what will do well because we are consumers of a number of these brands and services?
Yeah, so it's probably a good segue to just talk about, what we're seeing and what we think is working versus not. So, I think from a fitness standpoint, so fitness obviously, one of the largest categories in health and wellness. We've seen incredible changes in industry dynamics here. Consumer services businesses were, crushed during the pandemic because, quarantines and government mandates essentially forced unnatural channel shifts. So, we had seen something like digital fitness growing nicely, pre-pandemic. Then it went to completely explosive growth during COVID. But now we've seen pretty tremendous recovery of brick and mortar concepts, and leading brands and gyms and boutiques alike are seeing, double-digit percentage top line or membership numbers ahead of pre-pandemic levels. What's interesting though is, the consumer still has certain habits that have changed. So we're actually just operating now in an omni-channel world where the consumer wants to have it all and be able to work out inside of the home and outside of the home. So I think having a view on multiple channels is really helpful.
Yeah. I was just thinking, is wellness over time, is it an inflation-proof sector? Over time, will it start to get hit more as consumers pull back and perhaps not want to spend as much? Perhaps wellness is seen as more of a luxury than something they need, a staple, something they have to have in their life.
Yeah, I think maybe a decade ago you'd have a very different answer where, the health and wellness equation was a little bit more discretionary. I think now consumers see it as a staple in their lives and will reshuffle other parts of the pie to, make enough room for health and wellness spending. We're definitely seeing, with the return to, boutique fitness as an example, where, prices are at a premium to a lot of at-home fitness options. Consumers have gone back. They're back in the box, and they are spending ahead of 2019 levels. So so far so good. I do think even if you look at the last recession when wellness was nowhere near what it was today, a number of concepts were fairly resilient, and it was a way for, in a stressful time when people may have been laid off or really worried about finances, that was a way that they took care of themselves. So they would reshuffle other parts of their spending pie.
By the way, do you have a quick take on Peloton? Does this
That's always a complicated question. Look, I think the way that I would address Peloton or any at-home fitness option is that, high quality gyms and boutiques are absolutely back, but at-home fitness will stick around and is here to stay. Again, we are now in an omni-channel world where consumers want to have that fluid approach to wellness. Peloton has certainly, had its challenges around its unit economic model, but it was a first mover. It still has a tremendous brand. Pretty broad portfolio, really high quality talent. So they may have gotten a little bit ahead of their skis just running with that COVID driven demand, but still think it's a phenomenal company at the end of the day and will be here to stay.
And Aarti, back to the wellness theme, when Seema and I were putting this project together and talking about what we were going to call it, this was originally called Women, Wealth, and Wellness, because I think that wellness is it's just such an important topic, especially for women. It's something that we really care about. And we, in kind of workshopping it, we changed it. We ended up dropping it, to just Women and Wealth. But I know that you, I think early in your career, when you were a banker, helped launch some of the health and wellness coverage, right? You kind of went in, you saw the opportunity and said, hey, this is something that we should be covering. And you got a little bit of pushback on that.
Absolutely. That was certainly an interesting time. And I think there are a lot of lessons learned. And, as I look back, I think this is a phenomenon that is probably going to be broadly applicable to professionals, regardless of what career they're in. And I'd say, the takeaway is new ideas are always hard, because if building something new wasn't hard, then everyone would be doing it. So, as soon as I started to think outside the box as a junior banker, I quickly learned that whenever you've got something new and unproven, the natural inclination of folks is to say no. It's not familiar to them. It requires work and effort to understand. There are politics around who should be, deserving of chasing an untapped opportunity. And there's this, J curve where, it takes a couple years of investment before you can actually see the returns of that new project. So when I came up with the idea of covering health and wellness, there were plenty of naysayers, and I was told that the industry was too niche, too small. There weren't going to be enough deals to bank, and so I should just focus on covering existing verticals. But look at the Global Wellness Institute that sized the global wellness market at $4.4 trillion, which is forecast to reach $7 trillion by 2025. Even if you discount these figures materially, there's still a massive opportunity. But I would say if you really have conviction around an idea and you've identified white space that needs to be filled, persistence around that new idea is key. And if you have an audience that doesn't get it, go find a different audience. But don't give up on that idea. At the end of the day, time reveals all. And, persistence and sticking to your guns, even if people tell you that you're a little bit crazy, it can pay real dividends long term.
Yeah, and then just back to the Peloton news, right? Like those stories. Yeah, there was probably pull forward, and a lot of that business was accelerated through the pandemic. But Lululemon just had their announcement. They're expanding their offering, and there is certainly a lot more awareness and priority for wellness, especially now coming out of the pandemic. It's a huge market. I agree, and I'm glad that people like we're talking about it. Health is wealth. We care about how we feel if we're not feeling well, and the other part of that I think that is important is beauty, right?
Yes.
Because that also really impacts, like if you don't feel good, if you don't look good, you don't feel good, right? And I'm just wondering what the trends are now in the beauty space. As people,
Yeah.
people are out, right? They're traveling, they're back in the office. What is the next move in that space?
Yeah, so I would say, on the beauty product side, prestige beauty continues to form the best by far. This is again due to the relevant demographics involved and how market pressure has impacted spending patterns. Skincare remains center stage. It's one of the highest growth areas, 8% CAGR through 2024. And consumers are really looking at that intersection of clean label, eco-friendliness, and efficacy that are top of mind as they continue to be discerning, not just about the effectiveness of their products, but what the impact of the products might be. So health-wise, environmentally, and so on. We're also seeing, and this is connected to wellness, this focus on ingestible beauty and beauty from within. So think of brands like Hum Nutrition and Moon Juice and Nuco and other beauty-focused supplements that are gaining space at top-tier retailers. Or the acceleration of supplements for hair care like Nutrafol, which actually just sold a majority stake to Unilever. In hair care, we're seeing the skinification of hair care. So elevation of the hair routine, broader array of products, serums and masks and ampules, and focus on ingredients to nourish and strengthen hair. So you may have seen, in addition to Nutrafol, you probably have seen Vegamore, another brand that's gotten a lot of attention. And I'd also say personalization. So, brands where consumers can take a quiz based on their characteristics, their goals, and you'll see brands like Function of Beauty and Pros, both in hair care, that are doing that. And then I would say from the services side, the med spa category is booming. It was booming pre-COVID and had a very quick recovery. For those who are less familiar, it's laser hair removal, injectables, fillers, hydrofacial, cool sculpting. There's so many tailwinds to support this model: a growing aging population, societal destigmatization of these services. I call it the Real Housewives effect. And the fact that consumers are also taking a preventative approach to anti-aging and starting that process much earlier. So brands like Milan Laser, Laserway, Of Me, Ideal Image, you've seen a lot of private equity money go into this category as well.
It's funny that you said the Real Housewives effect, because I was really thinking about how social media is playing an impact, its role, right? And like, obviously, people are posting pictures of themselves every day in different platforms, doing, from videos to pictures. And I wonder if there's just like a dovetail there between this social media part of our lives and, and the beauty part.
Yeah, absolutely. I mean, I think a couple of things. So first of all, the digital age has just lowered barriers to entry for new businesses. So, entrepreneurs can just start a new concept much more easily, through Instagram, through social media. TikTok has been the latest. Don't ask me too much about that one. We're the wrong generation, but, people are starting businesses on social media. And then obviously, social media has influenced how people think about different products and services. So with something like the med spa category, yes, Real Housewives is just an example, but, there's really been this removal of stigma around a lot of services that may have been considered, something that consumers would hide before. So now you actually see people actively promoting on social media, hey, I'm getting laser hair removal done, I'm getting Botox, I'm getting XYZ laser facial. So I do think there has been a massive impact, social media as a form of marketing, social media as an actual channel for distribution, and then social media as just a game changer in terms of consumer sentiment.
And it's free, right? I mean, it especially if you're starting a business, having a free service like that where you could potentially, reach thousands or millions of people. I mean, I think the best case is, for people that go viral if you're starting a business. It's a great proposition. Like you talked about the space being crowded, right? The low barriers of entry. What would your advice be to a woman looking to start a business right now?
Yeah, so I think, first thing would just be identify a need in the market that's not been met, identify a use case. Again, there are such low barriers to entry in the digital age and the age of the entrepreneur. Every vertical is experiencing disruption. Every vertical is increasingly crowded. And a lot of brands, where you see the most crowding, obviously, is subscale brands. So you need to know how you can stand out and where your product or your service has some sort of competitive advantage or distinction in the market. So that'd be kind of, first piece of advice. And then, from a more financial standpoint, I think it's important for, management teams to be very thoughtful about how they're spending money, paying attention to unit economics, paying attention to marketing spend, and obviously that will flex over the cycle of a business. But one thing we learned from the class of 2021 IPOs, there were a lot of great growth stories, but unfortunately they were not profitable growth stories. And today, that combination of growth and profitability is actually far more important than high growth alone. And then finally, as I think about it from our seat, where we are, I'm running a SPAC as part of a, broader growth equity firm. Partnership is really important. So it's important for our management teams to know what they do really well and then where they can use some help, and finding a partner accordingly. There is a plethora of VC funds, growth equity firms, and SPACs. I mean, the 500 plus SPACs. Figure out what you need and get a partner who's going to be hands-on in that respect, and really help you take the business to the next level.
I don't know if you already touched on this, Aarti, but advice to other women who either want to enter investment banking, private equity, want to be entrepreneurial like you and launch a SPAC. What's your advice to them? Because it certainly takes guts in this environment to jump in.
Yeah, I mean, I think banking and private equity are great places to start your career. I do think before you get too entrepreneurial, it's great to be able to, figure out the nuts and bolts of your skill set. And so, learn the basics around corporate finance, modeling, et cetera, and then go be entrepreneurial. So you have the right skill set to succeed. I think that way you can somewhat de-risk what would be otherwise, a risky venture. There is a lot of room for women in the industry. I spent most of my career being in a male-dominated environment, but I'm pleased to say, I'm increasingly seeing firms, I'm at one of them, that have a huge female presence and really value that diversity of perspectives, especially in an industry like consumer, and there's certainly other pockets. I think, my secret weapon when I was building out a new business as a junior banker was actually just having a different perspective from my male counterparts, and using that unique perspective to connect with clients in a way that they couldn't. So, best advice would be, get those core skills first to help de-risk any sort of leap you take, and use, being female as an advantage. You can gain credibility through your unique perspective. And I think, sometimes you have to work twice as hard to get a fraction of the credit as your male counterparts. But once you start getting those concrete data points around your success, no one can really argue with the numbers and the facts. And that unique thought process can, really outweigh the gender discount that you may face upfront.
Yeah, Aarti, on that note, what would you say is your best lesson, your best, professional, your growth lesson, from, best advice you would give your younger self?
So confidence and persistence. I think, going back to kind of starting the health and wellness coverage area, I had lots of people who pushed back on that idea, and again, thought it wasn't worth time, that there weren't dollars there. But, it was a number of decision makers who weren't necessarily the target consumer for all this disruption. I was seeing something different in the market. So I think just sticking to your guns and having that confidence and putting in the time and work. If you know that there's an idea that makes sense, sometimes there is a little bit of delayed gratification, but I think, sticking to your guns, an idea that makes sense, especially where you have the data. I had anecdotal data just living in New York, seeing all the disruption around me, and I had, data on paper that companies wanted to raise capital in this industry. So if you've got those data points, stick to your guns, and be persistent.
It's so interesting you said persistent. Quick word there. How do you be persistent without coming across too eager? I feel like a lot of women that we speak to sometimes struggle with that.
Yeah, absolutely. So, one of the tools that I used was, to continue to treat my new business as a side project until it had enough wherewithal to be something on its own. So making sure I wasn't dropping the ball on any core responsibilities, so that no one could ever say, oh, she's pursuing this at the expense of everything else that she's supposed to be doing. It was incremental to everything else that I was supposed to be doing. So I do think, making sure when you're really onto something is important. You can have a great idea, but if you don't have clients who want to talk to you, deals that are ready to be done. That great idea is just a great idea, and it's much harder to convince folks when it's just a gut feeling or an idea. It's much easier when you have real facts. So I tried to make sure to kind of balance existing responsibilities with building this new business, and knowing when to pivot and really lean into the new business is important.
That's such great advice. It's so easy to get emotionally attached to an idea that we get really excited about. But to your point, staying realistic, understanding, and keeping an eye on a project, and having those facts available when you need to really put it in front of someone or escalate it.
And not get discouraged, I think is very important, because it's very easy to get discouraged when you keep, when people repeatedly keep saying, no, we're not really interested, or we really don't think it's going to work. I think that's very important.
I think we're all used to a no now, right? We're okay.
No, we're not. I'm not taking a no.
It's just part of the process now.
Yeah, a no means maybe no, not right now, but
no, come back later.
Yes, no means come back later. Exactly. Yeah.
Aarti Kapoor, thank you for your time. This has been excellent, and best of luck.
Thank you for having me.
Thank you. Nice to see you. Bye.